Trust me, this isn't your typical government bureaucracy story. This is about real money that you could be leaving on the table if you're not paying attention. Let me start with a question. When's the last time you actually reviewed your Social Security strategy? If you're like most Americans, probably never. You figured you'd pay in your whole life, and when the time came, you'd collect what you're owed. Simple, right? Well, here's the thing, it's not that simple. And that's exactly how thousands of people end up losing hundreds, sometimes thousands of dollars every year. Not because Social Security took it away, but because they didn't understand the rules of the game. The hidden complexity. Look, I'm not here to scare you. I'm here to arm you with information. Because knowledge is the difference between getting everything you've earned and losing money that should be in your pocket. The Social Security system operates on calendar years, which means certain deadlines and opportunities reset on January 1st. Miss these windows, and you might find yourself paying more than you need to, or worse, permanently reducing your benefits. Now, before we get into the specifics, let me be crystal clear about something. The Social Security Administration doesn't make this easy to understand. Their notices read like they were written by lawyers for lawyers. So consider this your plain English translation guide. Medicare premiums, the silent benefit killer. Let's talk about the first major issue that catches people off guard every single year: Medicare premiums. In 2025, the standard Medicare Part B premium is $185 per month, which is deducted directly from your Social Security check. That's $10.30 more than what you paid in 2024. But here's where it gets interesting and expensive. If you're a higher income beneficiary, you might be subject to something called IRMAA, the Income-Related Monthly Adjustment Amount. This is essentially a surcharge based on your income from 2 years ago. So your 2025 Medicare premiums are determined by your 2023 tax return. For individuals earning over $106,000 or couples earning over $212,000 in 2023, the IRMAA kicks in. Here's the kicker. These surcharges can range from an extra $74 to $443.90 per month for Part B alone. That's potentially over $5,300 extra per year coming straight out of your Social Security check. But there's good news, and this is time sensitive. If your income has dropped since 2023 due to retirement, losing a job, the death of a spouse, or other major life changes, you can appeal this surcharge. You have 60 days from receiving your IRMAA notice to file an appeal with the Social Security Administration. This is where year-end planning becomes crucial. If you received your IRMAA determination recently and your circumstances have changed, you need to act before the new year to avoid paying inflated premiums for months while your appeal processes. Every month you wait is money out of your pocket. Tax withholding. Avoiding the April surprise. Now let's talk about taxes, everyone's favorite subject, right? Here's something many retirees don't realize. Social Security benefits can be taxable. Depending on your combined income, up to 85% of your benefits could be subject to federal income tax. The IRS allows you to have federal taxes withheld from your Social Security benefits at rates of 7%, 10%, 12%, or 22%. You can set this up or change it using Form W-4V. Here's why year-end timing matters. If you submit your withholding change in December, it can take effect in January. But if you wait until January to make the change, you're looking at February or even March before it actually happens. That's 2 or 3 months of under-withholding that could push you into owing estimated taxes, complete with penalties and interest. Think about it this way. Would you rather have a slightly smaller Social Security check each month or a massive tax bill in April that you weren't expecting? I know which one I'd choose. The working beneficiary trap. This next one is huge for anyone collecting Social Security before their full retirement age while still working. In 2025, if you're under full retirement age for the entire year, Social Security withholds $1 in benefits for every $2 you earn above $23,400. That's the annual earnings limit. Now, if you reach full retirement age during 2025, the rule changes. For the months before you reach full retirement age, the limit increases to $62,160, and Social Security withholds $1 for every $3 you earn above that threshold. Here's what this means in real terms. Let's say you're 64, collecting $1,500 a month in Social Security, and you earn $35,000 this year. You've exceeded the limit by $11,600. Social Security will withhold $5,800 in benefits. That's almost 4 months of checks. But here's the strategic part. Your earnings are counted on an annual basis. So if you're approaching that limit in December, you might be able to defer some income into January, maybe delay a bonus, push back some consulting work, or adjust your work schedule. This kind of planning can mean the difference between keeping your full benefits or having them withheld. And yes, you do eventually get those withheld benefits back after you reach full retirement age through a benefit adjustment. But in the meantime, you're dealing with reduced cash flow that could create serious financial strain. Payment, timing, and tax planning. Here's something most people never think about. The timing of when you file for Social Security can significantly impact your taxes, both this year and years down the road. Your payment date depends on your birth date. If you were born between the 1st and 10th of the month, you receive benefits on the 2nd Wednesday. Born between the 11th and 20th, 3rd Wednesday. After the 20th, 4th Wednesday. Why does this matter for year-end planning? Because some people benefit from filing in December to get a payment before year-end for tax planning purposes, while others are better off waiting until January to push income into the next tax year. This decision can affect everything from your current year tax bracket to your Medicare premiums 2 years later. Remember that IRMAA calculation we talked about? Your Social Security income counts toward that. So strategic timing of when you start benefits could help you avoid or reduce those premium surcharges in future years. Spousal and survivor strategies. For married couples, year-end timing can be particularly important. If you're planning to claim spousal benefits, which can be up to 50% of your spouse's full retirement age benefit, the primary worker must have already filed for their own benefits first. Social Security applications can take anywhere from a few days to several weeks to process. If there are any issues with your earnings record or documentation, it can take even longer. So if you need both spouses receiving benefits before year end, whether for income needs, tax planning, or other financial reasons, don't wait until the last minute. The 12-month window. Here's something critical that has an absolute deadline. If you filed for Social Security early and now realize it was a mistake, you have exactly 12 months from your entitlement date to withdraw your application completely. You'll have to pay back everything you received, but then it's as if you never filed. You can file again later at a higher benefit amount. That 12-month window is ironclad. No extensions, no exceptions. If your deadline falls in December or early January, you need to act immediately. After you reach full retirement age, you have another option. You can voluntarily suspend your benefits to earn delayed retirement credits. These increase your benefit by 8% per year until age 70. The timing of when you initiate that suspension affects how many months of delayed credits you accumulate. Representative payees and disability reviews. If you're serving as a representative payee for someone else, maybe an aging parent or disabled family member, you have your own year-end deadline to worry about. You're required to file an annual accounting report with Social Security showing how you spent their benefits. These reports are typically due in January for the previous calendar year. The Social Security Administration takes these reports seriously. Late or incomplete reports can result in you being removed as payee, the beneficiary's payments being frozen, or even legal action if they suspect misuse of funds. For those receiving Social Security disability insurance, continuing disability reviews are something you absolutely cannot ignore. These reviews determine whether you still meet Social Security's definition of disability, and they happen periodically depending on your condition. Year-end is a common time for these reviews to be scheduled, and with the holidays, it's easy to let paperwork slip through the cracks. Don't let that happen. If your review is due and you haven't responded to their request for information, your benefits can be terminated. And reinstating them? That's a nightmare of appeals and documentation that can take months or even years. Banking and payment information. This might sound basic, but it's important. If you've changed banks, closed an account, or need to update your mailing address, do it before year-end to ensure your January payment arrives without interruption. Every year, thousands of people experience payment delays because they moved and didn't update their address, or their bank closed their account due to inactivity. When your Social Security payment gets returned to the Treasury, it triggers a verification process before they'll reissue it. That can take weeks or even months to resolve. The bottom line. Look, here's what it all comes down to. Social Security isn't a set-it-and-forget-it system. It requires active management, especially at year-end when multiple deadlines converge. You've spent your entire working life paying into this system. You've earned these benefits through decades of hard work. Don't let bureaucratic deadlines or complex rules cost you money that's rightfully yours. The decisions you make or don't make before the calendar flips to 2026 can have real financial consequences. We're talking about hundreds or thousands of dollars that could stay in your pocket instead of disappearing due to lack of action. Take stock of your situation right now. Are you subject to IRMAA surcharges that you could appeal? Do you need to adjust your tax withholding? Are you working while collecting benefits and approaching the earnings limit? Is there a filing strategy that could benefit you before year end? Don't assume the Social Security Administration will reach out to help you optimize your benefits. That's not their job. Their job is to administer the program according to the rules. Your job is to know those rules and use them to your advantage. Thanks for watching Buck Breakdown. If this video helped you understand Social Security a little better, hit that like button and subscribe for more breakdowns of U.S. politics, economy, and government programs that actually affect your wallet. Got questions about your specific Social Security situation? Drop them in the comments below. I read every single one, and your question might become our next video topic. And here's my challenge to you. If you know someone who's collecting Social Security or planning to file soon, share this video with them. The information we covered today could literally save them thousands of dollars. That's the kind of thing friends do for each other. Remember, this isn't about gaming the system. It's about understanding the system you've paid into your whole life and making sure you get every dollar you've earned. I'm your host at Buck Breakdown, where we break down the dollars and cents of American government. See you in the next one.